There is one stock that is about to skyrocket. The company is a semiconductor fab company. So on top, you have these LLM companies, OpenAI, Meta, Google, and then under the layer cake, you have the basically data centers. And then to fill the data centers, you need semiconductors, chips, and then you actually need fabs to build the chips. So that's the cake. I guess power generation somewhere in there. ASML is in the fab section, so pretty near the plate of the cake. And this chart looks ready to go. They are $1,000 stock, but they look like they can go much higher. There's another company, NBIS, that does have a pretty close relationship with NVIDIA. They do GPU infrastructure. So I talk about infrastructure, I really mean software infrastructure. Basically, if you spin up a GPU on Amazon Web Services or on the modern equivalent of that, or something as little as Heroku, or I'm going to just date myself with these cloud services I'm talking about. Whatever you use to spin up a bunch of GPUs, NBIS helps with that, Nebius. So let's jump into the charts before I keep digging this hole. It's not financial advice.
This is Sam Putnam.
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 So ASML is super well known. They're a $300 billion company. However, check this out. Look at this base. So they've basically been going sideways for a full month now, almost 2 months. They had earnings, and then as the market pulled back, they pulled back with it, but not as badly. So to me, it could be reminiscent of Google. When the market pulled back after Google had earnings, Google went sideways and then had to move up. So that's what I see for ASML. And then we'll jump back into that. But the other company, NBIS, is sort of forming a higher low. And they do what I said. GPUs, NVIDIA, they actually are connected to NVIDIA. I'm not just name dropping names or anything like that. Here's the literal connection. NVIDIA invested in NBIS. So 700 million, not nothing either. So it has a higher low here and sold off from earnings, at earnings. You can actually see the earnings sell off. Exactly. It's just sort of gradual. But whoops, that's a scan. If you want to ask about scans, you can, how to find stocks. But so this is what I think is most important, not necessarily the numbers, like the earnings numbers, but we can talk about those in a second if we need to. It's higher low here, and it went up a little bit, but the market went up a lot, right? So it's really hard to find stocks to buy up here, and it's hard to find stocks to buy up here because look at the 28th for NBIS. So if we look at that, this is the 28th. NBIS got crushed, right? And ASML got crushed too. So these big companies go down when the market goes down. So what's most likely going to happen is they'll pull back to say, like 1,020 or something, and then you risk maybe 1,000, like this high or something like this, 1,018. Try to risk very little, a couple dollars, and look for a move of $20, right? And then for NBIS, it's a little bit different because it's kind of a dip buy in a sense, but it's not a total dip buy. It's, it already had one jump, and then this was a big down day in the market. This was, so don't worry about this big red day, because if we look at SPY, this is the red day in the SPY. It was crazy. It was pretty scary. right here. So not too worried about that. Little bounce after that. So here's NBIS, and I think if it could come down to 88, that would be a pretty good spot to risk. If it did come down to 82, that would be a good spot to risk too. So risk a few dollars, 2 would be great. Risk 2, make 20, go up to that $100 psychological level. That would be the idea. So I'll jump into charts and sort of a state of the union for where the market's at. But first for ASML, just, year over year, I guess we're talking about revenue growth and earnings. We can give a chart by quarter. Guidance would be great as well. And you can do this. I mean, you can type this into ChatGPT just like I am, obviously. It's very approachable. But the good thing with ChatGPT is it doesn't give a lot of extra info. So, unfortunately, looking at like earnings and sales from one quarter to the next, I think it's a little just a little rough. I mean, what did it even do? It didn't even produce what I asked it to, right? Now it's going to do it. So that's why I've been basically looking at the current quarter, where it has strong demand, in the billions of revenue. So if you do look into quarter over quarter earnings and sales growth, you can, but that's not really that helpful in my opinion, because what you actually have to know is what was the expectation for each quarter, and then what did the earnings actually do relative to that expectation, and then also how did the chart trade at each of those moments. So instead of doing all that, generally what I do is I just look at the most recent one, and I don't even look at that unless it's just happened. Like with ASML, it hasn't really happened, right? It already happened. So you can risk that level. That's fine. That's a normal thing to do. This is the earnings day, so you can risk 1,030, which it's probably going to check back and do anyway. So that's another level in addition to 1010 or whatever I said before. If it comes to 1,000, that would be best. Yeah, and I think most people would agree. You can risk the earnings day, but in general, if you're getting super in the details, you can get a little lost. Where basically you can't just look at the earnings per share, because look, this earnings per share is bigger than that one, and I'm purposefully sounding a little dumb here, but the earnings per share beat here and the stock went down, right? So anyway, all I'm really saying is that this thing obviously has a lot of price agreement here and looks like it's going to break out, but because the market is already gone up a bunch, it's probably going to check back a little bit. And it could be interesting just to take a broader look while we have some time here, aka I don't want to talk too much about individual ideas right now when a lot of the market's probably going to pull back the next couple days, Monday, Tuesday. So you want to take a look at these before December 1st, but you probably want to be cautiously optimistic. ASML, I don't think the float is even... I think the float is big. I don't know why it's not listed here, but this is a big company. I don't think you have to even think about the float. And for people who don't know, the float is, someone was asking in the live, Jason it's how much shares we can trade. So if the float is like 10 million, like watch out. This stock could go down very soon because they could sell a bunch of shares. So they don't need, so it's 400 million. So this is a big enough float. It's not it's not a huge float, but it's pretty big. So you don't have to worry about them selling shares in the market. But anyway, that's like extra details. All I really wanted to say to look at here was obviously this is what we want, right? We want to talk about stocks here before they just go on a run, like TSEM, okay? Or like Light, or like Google in the past month, which of course has been exceptional. You know, those performances are exceptional within the past month, given the market has gone sideways in the past month. So that's obviously the point, but one of the better ways to identify them maybe is just lack a correlation to the market as a whole. So that's another reason why float is kind of something to know. This could maybe be like a little lesson video. We'll use Claude because it's a fancy educating, French teacher or whatever. What is float in stocks? Like if you haven't heard float, I'm just going to say it a lot because you might want to hear that a few times. So it's the number of shares that we trade in the public. So it doesn't include insiders, like lockups or restricted stock units that employees get, or buybacks. So if it's small, watch out. But anyway, TSEM is actually not a big company. Not to be confused with TSM. I know it's not TSM, and I still, what's the word? Associate it with TSM, which is not healthy. The TSM float is probably less than 200 million. Yeah, it's 100 million. So it's kind of a sweet spot. Like right now, for example, I know I just told you about ASML and NBIS as interesting ideas right now. And those are like hundreds of millions for the floats. That's kind of the sweet spot. TSCM is also 100 million. When you start talking about 10 million floats, not only do they not follow the market, they don't even follow like accepted guidelines of like human decency. Like a stock might go sideways and then just drop like 50% in a day because like some holders of the stock just decided to mess with everyone, right? So that's not really going to happen in a company like TSCM or NBIS, these 100 million floats. But anyway, the point is, these kind of stocks do get interesting. So it's good to mention, actually, on a day like today, I think, AXTI and NBIS for that reason, because they're like 100 million floats. They're not billion or multi-hundred million floats. I don't even know what is the float of like Tesla, right? Like 400 million? Yeah, it's in the billions, right? So you don't even talk about floats for these companies because it just doesn't matter. No one's going to mess around with Tesla unless you're a multi-billion hedge fund, then maybe you're getting messed with, but you and I are not, right? So anyway, at a period like this, it's nice to look at some of these energy companies that have relative strength as the market goes sideways, and maybe this is actually a pretty interesting stock, BKR. I actually have it on the list here somewhere. Yeah, see, I have it really near. So I chose 6 stocks for today, right? And BKR is the 7th one. So I'm sure I'll talk about this tomorrow. But in general, the reason I mentioned these was they went sideways as the market went down, and they're not super extended. Some of them actually are a little extended over the past 4 days. So they might have a pullback, right? I mean, ASML just went 10%. It's probably going to have a pullback. before it goes back up. But maybe, and I'll mention this tomorrow, but you know, if you can really, it's such a delicate balance, because this one, it moves slowly, so you don't want to get into this. But I guess it has gone up sort of 5 days in a row. This is not an up day, the red day. But it just broke out. So it's also, you can risk the breakout level. So that's good. So you're just balancing all these different things. Yeah. So you just have to sort of, it's not an art, you know, but it's not a science. It's like it's like an AI, you know, it's both. So AMQR, same sort of situation. This will be interesting if this pulls back and then goes. So those are some ideas. I'm going to sign off, but love the live interaction and love this video recording. Hope it helps you. ASML and NBIS definitely look interesting. So if you like those ideas, hit that like button. If you want a free course on how to buy stocks before they go up, hit that subscribe. I post that in YouTube posts once a month for subscribers. And if you want to take advantage of that $19 Cyber Monday offer, I do daily Monday through Friday drop-ins in there, kind of like this, but more detailed. And you can also ask any question there directly. So check that out at stockscommunity.com. I'll see you in the next one.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.